Yeah. Okay. And I know I'm switching around here a lot. I just like your thoughts on so many of these different subjects. I want to ask you about CBDCs now. Are CBDCs something you see coming into place in the next? What would be your time frame for central bank digital currencies? Canada just announced, the Bank of Canada's website just has a press release right now that they're partnering with MIT, which everyone here found humorous, that like our Bank of Canada is going to MIT for some technology expertise to make this happen. But do you see these coming out? And the reason I guess I'm asking you is I always just doubt the government's ability to put anything together technically that actually works. So in my mind, I'm like, do they just kind of grab onto this whole stable coin thing and say, okay, stable coins are our CBDCs. We're going to regulate it to the point where we can make it work for us and forget our own central bank digital currencies? Or do you think central bank digital currencies are really something we're going to see?
So I think my base case, and this is fluid, right? Because as we get more information, this can change over time. But my base case now is that we're going to see a spectrum across the world. So in China, central bank digital currencies are already here. They're just kind of been arriving over the past couple of years with testing and kind of rollouts. And so China is capable of doing it partially because they started researching it in 2014. So it's like kind of a long cycle for that. It's not something you just put together in 6 months. And so as the rising power that doesn't really like the current system financially, and as a country that very much likes surveillance and control, they viewed central bank digital currencies as a natural fit. In the West, it's more challenging, right? So the ECB published a document back in 2020 talking about the benefits of CBDCs and what it can mean. It can give them more seniorage. They can basically take market share back from banks. They can surveil and control more. They can do kind of more deeply negative, below zero rate policy. It gives them more tools, which if you're on the other side of that, sounds terrible. But from their
Yes.
perspective, they like it. And then
Once again, Lynn, you're saying it very factually, and I'm freaking out over here. But yeah,
yeah,
I agree with you totally.
and then in the United States and Canada, I think that kind of the further west you go, I think I view it more as like stable coins because you know as you head west, you get more kind of governments less willing to operate large technical things themselves and more willing to partner with industry to operate it for them. And so I see, for example, regulations try to make stable coins more backed by kind of by more provable reserves. Maybe only banks can issue them, or maybe you have to have them 100% banked by cash and treasuries, for example, and that they can incorporate those into the system. And then those are kind of an arm's reach central bank digital currency, right? So for example, large banks are obviously going to comply with government regulations in the United States and Canada, and so I think that, and then they can hire technical providers to kind of administer the technical details of stable coins. And so I see that as the most likely case, especially I don't follow Canadian politics quite as closely as American politics. In the United States, we have a very tightly divided Senate and House, and basically we don't really have enough consensus to do anything, um,
Yeah.
which is good or bad depending on what topic you're looking at.
And we
And
just copy what you guys do. That's how we operate. Just so you know, that we just copy what America does.
So yeah, so I mean, to the extent that's the case, I see basically just because of political division, I think you tend towards that private public partnership where I see stable coins being more relevant in the West and CBDCs being more relevant in say places like China, and Europe's maybe a little bit between the two and still remains to be seen. I think you can see a spectrum of government control versus kind of corporate
Yeah, that makes
corporate led.
sense. Yeah. And we really do just copy what the US does, Lynn. Like literally, we just don't do much up here except selling our gold. Canada, I don't know if you know this, Canada has like 77 ounces total on its balance sheet. We sold
I
all
did
our
I did
gold.
s- I did see that you have zero, like roughly
Yeah, it's
zero.
rounded to
Yeah.
zero. It's 77
Yeah.
ounces. So we could just hold Canada's total gold in the palm of my hand right here.
Yeah.
That's how much gold Canada, which the US didn't do. So that's something we did on our own. Or sometimes I think, was that like the central bank? Was that the US Fed calling the Bank of Canada saying, listen, dump some of your gold. We need to kind of get some of that on the market. These are some of the thoughts that go through my head. But last thing before I switch topics just a little bit on you, the chart of truth. You just tweeted about this. Can you describe what is the chart of truth? And why did I think it's just on your Twitter feed right now, actually, or about 20 minutes ago? What is the importance of it? Why are more and more people talking about it? What do you think of when you discuss it?
So basically, in the developed world, we've been in a 40-year period of disinflation, which doesn't mean deflation, but it means lower inflation compared to, the end of the 70s, and consequently lower and lower bond yields and rising debt to GDP. And that goes back to the long-term debt cycle I talked about. And so a lot of back tests, a lot of assumptions about equity performance and real estate performance, all these different asset classes, they've had this 40-year tailwind of lower and lower interest rates, which when you use interest rates as discount rate, basically as they go down, it lets you value other assets more highly, and it makes financing costs cheaper. So you can have a higher house to income ratio. You can have a higher stock market to income ratio. You can as yields go down, things get more and more financialized, and it's a structural tailwind for assets. And if as we hit roughly zero, some countries you hit negative, and if you just start going sideways on yields, let alone if you start going up in yields because of inflationary pressures and things like that, uh, that can be a headwind for a lot of assets. And so kind of the chart of truth is looking at the long-term US Treasury rate and see that it's been in this very tight, 30 to 40 year downtrend. And that every once in a while it kind of it tests the upper bound, it tests the lower bound. It's been oddly perfect. And right now, as we've been in this inflationary environment, as bond yields around the world have pushed up, among other countries, the US Treasury yield is poking the very top of its channel. And so a lot of people are looking at it and say, okay, we just kind of bounce off that again, or are we going to break out into a new type of structure? And so my base case is that, we're going to be probably a choppy sideways period for a while in yields. I don't think we're just going straight up to like 8%. I think we're going to chop around for a period of time and just be under the inflation rate broadly. But that has implications for all sorts of asset classes around the world. That basically the structural bull market is more challenging now going forward.
Lyn, I'm going to switch gears a little bit on you. I'm curious. I read a little bit about your story on this Business Insider article. How do you get to the point where you are doing such amazing work with your analysis on equities, the macro analysis that you do? What gets you to this point? What can you share about your story? And there's one quote in here. I don't know if it's a quote, but it's something you mentioned, and you can tell me if it's accurate or not. It's from this article, and it's talking about your upbringing and your story, which I found very inspirational and kind of motivating. And it kind of gives me context to understand you better. But you have this line in here. It says, the fun of a trip is who you are with rather than how classy you travel. Luxuries are just the sprinkles on a sundae. And I just love that, because when I reflect on my own life, it's who I hang around. My trips with my family are ultimately like my happiest moments. And those moments sometimes are stuck in an airport somewhere, stuck. So like, it's not, like not the most pleasurable scene, but I'm happy because of the people that I'm with. And for you to write that just shows me kind of, you have a really interesting life perspective. Can you talk about that a little bit? Like, how did you get to the point where you're able to talk that way?
So yeah, for people that aren't familiar with my background, I came from relative poverty, and it was kind of a difficult environment. Even experienced periods of homelessness as a kid, and then after that, it was growing up in a trailer park. So kind of different levels of poverty, from kind of pretty low levels of poverty to kind of lower middle class type poverty. Luckily, it wasn't like developing country poverty, like extreme poverty, but um, and I think that influenced my views on money, my views on investing. Um, it had upsides and downsides because obviously it gave, you kind of get like stresses about money that I think stay with you for the rest of your life in some ways. Kind of like how if your grandparents lived through like the Great Depression or the war, they're like saving like the rubber bands because like, you know what I mean? Like they're saving like everything because it's like they were used to scarcity. And so it kind of imprints that, but also, for example, I had to grow up quicker, than I otherwise would have. Um, and so it kind of just set me on the stage for, kind of an interest in finance. And so even though I went into engineering, ultimately, I kept gravitating back towards finance. That was kind of always my key passion. And so over time, it's just been something I like to learn about. And then even other things that I learned, like, for example, I have, an interest in politics to an extent, but for me, it's always the quantitative aspects of politics. Like, how can I tie it? What has happened in the world? Why do things happen this way? What are these cycles we go through? And so I often view things through the lens of finance. And so going back to that quote, one of my approaches has been, relative minimalism, basically that, it's passion that really drives things. So in order to get good at something, it's you have to be passionate about it because that's what makes you put in the hours and that's what makes you kind of go through roadblocks and go through challenges. If you're stuck on something, if you don't care about it, you'll just be like, eh, and you'll kind of let it go. But if you care about something, you'll be like, okay, no, I have to figure this out. And you'll stay up late that night and you'll figure it out, right? So being passionate about finance is what kind of allows me to break through things. And also, when I talk about say building wealth or kind of building, just resources, it's not just about spending less or making more. It's also just about realizing that part of what makes life enjoyable is the experiences. So the being passionate state of flow when you're working on something or spending time with family and friends. And so my whole approach is basically like, own utility and rent luxury. So have kind of a low baseline that's easy to manage financially. And then if you get very, if you're comfortable, you can always go out and experience more expensive things if you'd like to. And you can use money to solve pain points. So if you look at what makes people miserable, usually it's long commutes, bad mattresses. There's like pain points you can fix with money. And whereas like money can't buy happiness, it can solve problems, but it can't buy happiness. So if you kind of look at if you analyze how you think, so what are your pain points? And also you can look at studies. You can say, okay, what are the leading contributors to misery, and how do I make sure I avoid those? And so the combination of looking at that broad statistical scale and your own life, I think that there are ways to use money wisely. So ways to use it poorly would be, for example, to show off, to try to keep up with the neighbors, to just do what everyone else is doing, to get on a constant treadmill of consumption, and versus just, okay, what do I actually want in life? What problems do I want to solve in life? And go from there. And basically, I think that, if someone focuses on passion, they're going to make more money usually. Um, and they also will spend less because, instead of trying to fill a hole by, buying a second sports car, they want to spend their time doing what they like. And that could either be cheap or it could make the money.